So, welcome to District 4, the best place to be for information and news. I'm your host, A-Love. We are talking financial literacy. And I literally just got off the phone. We went into a private conference with, it was Cara DeFreezy and Mike Smith. That is the Treasury Department in Washington. I'm going to be talking about the child tax credit. I'm going to be talking about a lot of things that have to do with taxes to answer a lot of the questions that you guys have had. Now, no matter what financial level you're at, you're going to have to pay taxes, right? Eventually, if you're making money somewhere, you're going to have to pay taxes. We called this one Beyond the Basics because it does go beyond the basics. And I mentioned earlier who I was on the phone with Washington because I wanted you to know that it was legit information coming from the source. That's one of the things we offer here that's different from a lot of people that are just on YouTube. We literally have information that comes usually from the sources. So I try to make it as accurate as possible because I really want you to get it. I really want to help, and I really want to share whatever knowledge I get. And sometimes I learn things. I learned a little bit about the child tax credit as well. And so it's me just making sure we're all clear when it comes to finances. Okay, so having said all of that, let's talk about the first question I got, consistently, is always about, it talks about, I thought I had the actual question. Let me see if I actually have it. But anyways, people ask me most of the time about IRAs, and particularly because of the way that this series is going. So now we're gonna cover some of the technicals. And this is why I really harped and will continue to change the mindset of a lot of the people coming in here that have never heard this information before, or got scared off by the technical terms, or came from generations after generations of people that just don't understand finances. And so I harped really hard on the first couple of parts of the series to just cover that part of it, just to change your mind. And I always say your relationship with money. Because when it comes to these types of things, this is generally when I lose ears. Because they go, I was listening to you when you were talking about grinding and mindsets and all those things I can identify with, and now you're giving me a bunch of terms. So I'm not going to do that. I'm going to try to make this as basic, not even basic. I want to make it so you understand it and can actually apply the information. So that's where I'm at with this. So for those of you that are financially free, for those of you that have financial advisors, for those of you that are investors and familiar with the terms, it'll still apply to you too. Because this is information that you probably don't have about the child, especially with regards to the child tax credit. And then some of the terms you guys hear, it'll be able to actually normalize them and make them a little bit more friendly, user-friendly. For lack of a better description. So I'm gonna give you guys a few minutes just to gather yourself. A lot of you have been taking notes, I can tell, or you remember really well because you guys asked me questions. Just before we get started, make sure you use the notification button. Subscribe. You guys are subscribing, and I do appreciate that. But make sure you use the notification button because this particular series, we do a lot of, we're gonna have a lot of surprises with a lot of our series coming up. So we will do a lot of things on location, or sometimes we won't be able to post one, or we'll be at another because we do other types of shows as well. For example, we did sports just recently. So we'll be somewhere else or interviewing someone, and we won't get a chance to post it, maybe till later, or we'll go live in the middle of something. But I want you to be notified, especially if it's a finance show. Also, these shows are intended to be watched as a series. So make sure you're watching them on the playlist, because the playlist allows you to watch them in order, right? Or once you've seen them in order, you're gonna need to go over and rewatch them again because it's a lot of new information for everyone. Also, we cover all financial levels. You're completely broke, I'm there with you. If you're financially free, I'm there with you. If you are rich, I'm right there with you. And then if you're wealthy, I also get you guys too. So I cover everybody. So I try to give as much information that's just new information that I get from the sources that I'm able to apply. And so you're designed to watch these videos over and over again is basically the point of that. So I'm gonna give you a few minutes and then I'm gonna let you, and then we're gonna get started. I wanna make sure we have all of them. I don't have my mic today, so I'm gonna have to talk really loud. So hopefully you could hear and understand the first parts of what I just said. I'm trying to talk loud enough. Good acoustics in here, so you should be able to hear it. Otherwise, play it again. Okay, so, all right. You guys a few minutes to come in. Welcome, welcome, hello, hello. Hi, hi Hannah, how are you? Okay, so we're gonna get started by talking about IRAs. So someone asked me the question once and then it was asked again and again, and you know if I address something it's because multiple people have asked me this question. I can't talk today, I've been up all day. So I'm going to address that because I did kind of give like a little bit of an overview. It was like very brief. One time I answered a question, but because I kept getting multiple requests, please answer this question. Please give us, break it down. A lot of the videos that you get, again, they don't break down what you're actually, in a way that you can actually use it. So we say IRA, okay? What does that actually mean? It is an individual money account. And you're like, for those of you that don't have one, or you're not even into that part of finances, you're like, what are you talking about? It just means that it's not connected to something. It's the basic way to say that. It's not connected to your job like a 401k would be. For example, a lot of you are familiar with 401k because your jobs generally offer that. Or it's not connected to like another person. Generally, it's just you. Even as married couples, oftentimes you'll find that if one person's name is on the IRA, the other person can't really access it. That's just the way that it works. It's individual. So that's basically what it means. It's individual money account. So it's a money account. Now, another misconception about an IRA, on a basic level, is it's not an investment in and of itself. Okay? Like, you're like, what? And some of you are like, yeah, I know. And some of you are like, hello, can we get to the advanced part? But I'm going to break it down just for those of you that are just new. You haven't had one yet. You're looking to get one or whatever you may need. So it houses, I guess a better way to say that is, it houses your investments. Meaning like it's like a shell for your investments, like a little coating over the top. Where you put your CDs, or you can put stocks and bonds, or those types of investments, sort of inside of this shell, for lack of a better description, or this place where it's housed, right? It's like a room in your house, just to make it sound basic. So in and of itself, it is not an investment, but you do put investments inside of that. And why is this so important? What is the big deal? Number one, a lot of people may not know this, but it is a government incentivized program. That is a fancy way of saying that the government would like you to open one, right? Okay, it's just basics, they put the program out there. It is designed to help you, and it's something that they encourage, right? You're not flying under the radar. It's an encouraged thing that they would like you to do, a way to invest on multiple levels, that they actually give you something for doing it, right? Like a CD, for example, with a bank. And if you haven't seen that, look at one of my past videos. I do describe what CDs actually do, but or a broken down version of CDs. So it's the same thing here with an IRA. The government's like, hey, we're gonna give you tax incentives if you house, quote unquote, your investments in this way. So For broke people and people with a broke mindset, this is like, what are you talking about? And what do you mean incentivized, and why is taxes have anything to do with it? It breaks down in two ways. So there are two IRAs that you can open. Familiar with the terms, probably you've heard of a Roth, right? You probably, if you go get your taxes done somewhere, they'll say, do you want to open a Roth? And you'll be like, yeah, probably no, for broke people. And for people that are financially free, they might be like, well, I already have a traditional one. And for those of you that are super financially advanced and have a strong portfolio, you probably have one of both of these, right? The difference between a Roth IRA, that's one, and a traditional IRA is basically how you are taxed, right? So there are certain laws that have changed with Roths most recently that makes it a little bit different. So I'll cover that a little bit, but I want to go a little bit more slowly. So how you are taxed, and I'm going to tell you which one would probably benefit you the most, right? So most people think of an IRA, and they think of a traditional IRA, which is the go-to, right? Because most of the time, not all the time, if you're opening an IRA, you understand that your finances are in a good place, especially if it's a traditional IRA. Not always, right? But for the most part. And you open a traditional one, which is longer, right? Okay, so let's slow down a little bit. Why would you open a traditional one? A traditional one, which is usually longer, which carries more penalties if you take it out early, is for tax purposes. But also, you have to understand that IRAs are designed for retirement. So they're long term, right? The idea is to penalize you if you try to take money out before that. And it's almost very difficult to take it out ahead of time, and particularly if you have a traditional one. But the benefits for you in a traditional one usually benefit people that have larger sums of money. Now, why am I saying that? Because you're going to be taxed in a simplistic form once you start taking what are called contributions. You've probably heard this term before. What is a contribution? That is a fancy way of saying when you start taking money out of it, when you're able to take money out without penalties. It's when they pay you, right? So it works like this. You put your money in, you put your money in, you put your money in. Let's say you have it for, I'm just going to make up a time period, 7 years. And in 7 years when you retire, the traditional age is 59 and a half, right? That's the designed idea to have an IRA for before you start taking, or it starts paying you back, meaning the money that you have in there starts taking back. You get taxed in a traditional IRA on that money that you receive back, right? After you build it, right? So I guess an interesting way to say it is if you're working on a gross, right? And then once, like a paycheck, like, look, yeah, for broke mindsets, when you get paid, you get taxes taken out, right? It's the same thing in a traditional IRA. Once they start paying you, taxes come out. The difference between that and a Roth is that you're taxed in the beginning. Just a fancy way of saying that, right? And it's better for people with lower incomes. Because once you get these quote unquote contributions, meaning that it starts to pay you back, there's no more taxes on that, ideally. Now, some of the laws have changed, right? But ideally, that's the scenario. And that's why a lot of people open a Roth IRA. And if you go to somewhere like, I don't know, H&R Block or something, for example, they'll recommend that you open a Roth. Because they're probably looking at your income, right? Or how much money you have. So it's the same thing when you have wealth. Say you're financially wealthy. Ideally, and most of the time, if you bother to add that into your portfolio, because you probably have other investments in different ways, you are going to take the traditional route, right? Because you have larger sums, because it grows on your portfolio, and you're building, I don't want to use too many terms here, but let's just say quote unquote material wealth, right? Because for those of you that have a broke mindset, or for those of you that are financially free and you're not really wealthy yet, or in the rich category, I guess a good way of saying it is financially you are one way on paper than you are net. So it's important to understand that, right? That's part of financial literacy, right? Is understanding that the misconceptions that are often associated with people with money, right? So someone's worth billions of dollars because their company's worth billions of dollars doesn't necessarily mean that if you break them down all the way to their net worth as an individual, that they're worth the same amount of money. Probably still wealthy, right? But maybe not to the extent that you're thinking, right? So that's the understanding. So when you're choosing IRAs, you know, for the most part, like I said, when you're breaking it down towards taxes, because we're talking about taxes here, right? That's usually the basics. This is just the basics. So the basics is if you're not financially wealthy, maybe you're financially free, you're trying to do a little bit of investing, and when it starts to pay you back, taxes aren't going to be taken out. They're generally taken out up front if you open a Roth. That's probably a better scenario for you than it would be if you opened a traditional one, which is generally for people with, you know, and that's how they recommend it. If you have a financial advisor, they'll say, you know, they'll look at your portfolio, see what your, you know, your net is. They'll see what you're worth on paper, and they'll recommend one of the two, right? Or you can own one on your own. I mean, and you can do anything online now. So, but do keep that in mind when you start thinking of that. Now, for those of you that are somewhat savvy already, those of you that already have one, somebody asked me, the question was, how do IRAs apply to gold purchases? I guess that this particular group of people were thinking about purchasing gold, even though I told you, look at my other videos, make sure you're financially ready to purchase gold. But it breaks down because, let's say, unless you're paying cash for gold, they're gonna roll you over into an IRA. And it's gonna be, they usually ask you, if you'll note, if you've ever gone to a gold broker, the first question we asked was, are you 59 and a half? Because that's really the lack of penalty point, right? That's when you can roll it over, that's when you can do conversions, that's when, you know, you have less penalties if you're accessing money. The general age is 59 and a half, so they're gonna ask you that question really up front to see if you can even get rolled over into an IRA. Not true if you're using cash, but also not true for every broker. But for the most part, it's going to be rolled into an IRA, and that's the preferred way, right? Because gold becomes a part of your portfolio, right? Even though you can put anything in there, gold can be one of the things that you put in. Okay, so having said all that, so that's the basics on taxes, IRAs, why it's important to have one. You can put larger sums in there. There is a limit, you know, $6,000 per year, give or take. I'm pretty sure it's $6,000 per year at this point, but I'll have to look it up again. But that you can put in per year, and it houses you. It protects you tax-wise. It allows you to make other investments that go inside of there. And at some point, you will start getting what are called contributions, which means it'll start paying you back, right? You can take money out with only taxes, but not necessarily penalties, okay? So, let's see. I think I have some questions about that. Somebody asked me, how do you plan for, what to look for when you plan for retirement? Okay, so this is an interesting question because we have to apply it to finances, right? And I think a lot of times this is where it's gonna get boring for the broke mindset, because the broke mindset is like, oh, this is so technical. This is for like not, you know, hello, Robbie Buck. Hi, everyone. It's so, you know, technical, but I'm going to tell you in this way. Once you start building your finances, you're going to look at my videos, you're going to start to change your mindset, your relationship with money, and then you're going to start building. An IRA is going to come into play. It's going to come into play because you're going to, even as a starting point for how to invest. So I have to tell you all of this stuff. It's not that I'm, you know, just pushing stuff on you, but that's why I said, watch them in sequence, change your mindset. And this is a lot of stuff that people don't make basic. And it's almost to help keep that gap, right? in there largely, right? Because the gap is huge between rich, wealthy, financially free, and, broke, quote unquote, broke, right? So I'm trying to help lessen that gap by giving you the information that you need. So having said all that, planning for retirement, there's some things you need to look for, which is very, very important. Asking what's everyone up to. So there's some things you need to look for. You need to look at the number of your living expenses, meaning the number, right? You need to realistically say, this is what I'm needing. And why are you doing that? Because ideally you need to have an end goal, right? So when you ask me how do I financially plan, the first thing you need to do is decide what age you want to retire. Some people want to retire early and they just say that like it's like an unachievable goal. Some people are, I got a question one time, the person says, I'm 40. How do I plan for retirement now? You know what I mean? As if it were too late. So you have to look at your living expenses realistically, right? Get a number. We're past the point now where we're just talking in theory, right? Because we've been talking in theory up until this point. Now I need you to get an actual number. Your net take-home pay, I need you to have a number, okay? How much are you liquid? This goes to the people that are rich or wealthy. Liquid. I need to know your liquid worth, which means when you run to the bank, what's in there. I don't need to know what your business has. You don't need to know, what you're going to be expecting, how much you've borrowed, get none of that. You need to know how much you as an individual are worth, not on paper, right? This is how you build real wealth, right? And some of you don't know this. This is something that a broke mindset is like, what? How could you have millions of dollars and not know? How many millionaires do you know file for bankruptcy eventually, right? It's because they're not following exactly what they have net-wise. They're following what their business has, what their money, what their financial broker says they have. But they're not really seeing, if I go to the bank right now, what's in there? Some of them millions on paper, $20 in the bank. And I think Jay-Z was the one that alluded to that. You never know what's in my bank account. It could be zero, he said. And that's the truth, right? With all that is going on, you could be zero. So you need to know, what are you worth liquid-wise? Now, this also comes into play later because you may need to liquidate. These are for people that are living above their means. The above their means people, ultimately, you're going to have to liquidate. I'm sorry. And liquidate means what? You're like, liquidate? What is she talking about? Now she's just going too far. No, liquidate means you're going to have to break stuff down or sell it. Your house is worth $450,000. You lose your business during COVID-19. I'm just using that example, right? What does liquidate mean? It means you take that house and you sell it if you can, for what you can, and you move into something smaller. Let's say you're broke. Say you're cheaper than that. Let's say you just lose your job and you're now retired and you're living off of Social Security. You're like, I don't have anything to liquidate. I bet you have a car payment. And I bet you have more than one vehicle if you are married. That means you take those cars, return, take that money that you get, buy 2 cars that are paid off, and put that money in a savings. Right? That's what liquidation means. But you won't be able to do that if you don't know what you actually have. Right? And then you want to total your future debts. Future debts. We're getting more advanced now. Future debts. Right? And you're like, well, how does all this apply to taxes? All of this has to do with how you're being taxed as well. You have to know how you're being taxed on this stuff. Because many people don't. They just go, file taxes, and then that's it. Happy to get a return, right? Oh my God, I got a big return this year. And that's how most people that are financially and mentally broke live. They live to pay those, they get those taxes back, and they're like all excited. And maybe that's not the way necessarily, because you don't know how much they're taking from you, right? You don't even know that. So future debts. Future debts means you need to know how you're being taxed on all of this, because taxing technically is a debt, right? Because you're getting money removed from you. Can you file an exemption that year? These are things you need to know. Okay, and then total your assets. You just need to know how much positive income you have coming in, and then total your net worth. You're like, didn't you just tell me to do that? No. I told you to find out how much you're worth liquid and then total your net worth. That comes after the fact, right? After the liquidation. And all of that has to do with your taxes, right? Retirement and taxes can be a problem, because how you save and what you put your money in and how it's taxed, it's how much indicates how much money you keep, right? Okay. I have another question. Let's see. What are some steps to plan for retirement? Well, okay, I just answered two of them, but your two major questions should be: at what age do I want to retire, and how much do I need to retire to live the lifestyle you want to live? And that includes understanding how you're being taxed right now on the income that you're making, or if you're not paying taxes, because some of you don't have income, right? So you're not paying taxes, but how does that apply? Okay. I am 71 years old and I have nothing saved for retirement. Okay, so not having looked at your finances, I'm going to make some assumptions just to make it a general answer so that everyone can apply. Okay, so that means you haven't put anything away and you're maybe living off of Social Security. It means that you don't have anything extra, right? It means you're living on a fixed income, right? It means you're living off of someone else, possibly. So in a case like this, and you must be concerned with money, right? So there's realistically speaking, you have to supplement your income. You've waited too late to do long-term savings, right? And I mean by the fact that you said I have no retirement, meaning you didn't invest or save, you don't have IRAs, you don't have 401ks, all of those things. So you are going to have to supplement. And you're like, what? I can, I'm too old. But it's only temporary. I think when I say these things, people freak out because they think they're for life. No, it's enough to gather so you can put your money in something that's going to make more money for you. And in your case, at your age, you have to do something that's going to be short term, but you're still gaining interest on it. But you can't do that if you're living paycheck to paycheck yet, right? So you're still doing that. You're still living off of, I'm assuming, your Social Security at this point, right? And it's probably not enough because, you know, no matter what type of job you have, Social Security alone wasn't designed, here's a financial trivia, it wasn't designed to be the only thing to live off when you retire. It was not. It wasn't. I'm sorry. So a lot of people don't know that, so they plan to live off of Social Security, which was not meant for that at all. So if you supplement, like say for example, you said here that you're getting paid $2,000 a month. You have $2,000 that you get from a side job, so you do have a side job, and then you said your husband has limitations and can't work. Okay, so I'm assuming you both have cars because you say we have cars. So I'm assuming when you say we have cars, that means you have payments. Okay? You should not have this right now. You should not have this right now. And if your husband cannot work, you're already supplementing. I don't know what kind of work you're doing to supplement, but yeah, you guys need to figure out to get one more source of income temporarily to invest it in something else. That would be, because you don't know how long you're gonna live. I mean, you could be 100. You could be, 80. You could be not, you could just be, and you have realistically, and I know oftentimes when you're older, you feel like you're at the end of everything, but people are living longer and longer. Longer and longer. So you don't necessarily, just because you're 71, only have a you have 2 years left or something like that. You start panicking. I have 2 years. You don't. You probably have about 10 or 15. If you're in pretty decent health. But even if you're not in decent health, you may even have another 5 or 6, right? That is enough time to get you financially secure. Just is. So I wouldn't panic if I were you, but I would consider maybe shifting to one car or maybe buying, just something to get you around. You couldn't be going that far. No disrespect if you're 70. You're already retired, so you don't have to go to work every day. So you can get something that's going to work for you guys temporarily until you build some sort of savings, some sort of investment, something that's going to make money for you. And you have, whether you believe it or not, the time to do that. So that's the answer to that. Let's see what else we have. Okay, so we're going to talk about the income tax credit. And again, I got this from the source. Washington got off the phone with the AmeriCorps Vista they had a Cara DeFreezy and Mike Smith. They are both from the Treasury of Washington. So this is coming from the source. So all the information I have about that, this is all up to date as of today. So the federal tax credit. So first of all, one of the misconceptions is almost that it's free money. Sorry. It really isn't in that sense. You will be taxed on it, and you might want to keep that in mind as you apply for this. But one of the major things is there's 2 reasons for this, right? And 2 goals to achieve. Now, when you get on any Washington program, any government program, it's good to know the thought behind what they're doing. Because if you understand that, you'll know very easily if you should apply, the long-term effects of it, how long it will extend. In this particular case, I got it from the source. They are trying to make it a permanent program. So you should be aware of that ideology, that they are trying to make it permanent. So people are thinking, oh, it's temporary, and it's free money, and no. It's designed to not be temporary. They don't want it to be temporary. They are trying to move forward. President Biden, I can say this because I did get it. They had Kamala Harris was on the line and she gave us a message. So they wanted to extend the program. So the one of the main goals is the child tax credit intends to be made permanent. The second part are eligible. You can be eligible if you're not paying taxes. That's goal number 2, right? So you're like, what? How come I'm not getting it? Well, A, because a lot of people don't know they can. Especially if you're not financially literate, or you are completely think that you don't ever need government programs because they're only for poor people. This is not true. Child tax credit is not for poor people. It is designed to help poor people, right? With certain income levels that have children. But it is not for poor people, quote unquote, specifically. But it is to help the poverty level, so let's not confuse that. So depending upon where you are. But you should also be aware that the program is there, right? So ideally you would get, you can get it if you don't file taxes, and you need to go to the website that was given. childtaxcredit.gov. Sorry, goodbye. So you go to childtaxcredit.gov and you file there. And it will allow you to get these tax credits, even if you didn't file taxes for the last 2 years. Now, if you did file taxes, automatic, right? It'll file it, you'll get it automatically. It'll go even to your bank account. If you've already gotten a stimulus check, it'll go to that bank account that you had the stimulus check. But just focusing on the question was what happens if you don't file taxes? You can still get the child tax credit. You actually can. And you can go to that childtaxcredit.gov, fill it out, and then they will be able to get you to. Now, another question was, what if you don't have a bank account? Still, you will get a physical check If you don't have an address, they also do work with that. They answer that question actually on that site, but you can still get like a physical check. Wouldn't recommend it. It takes longer, but if you don't have a bank account, you don't have a bank account. But and then also the question was asked, what if you move a lot? They do address that as well. So it's really it's considered an anti-poverty program. So they do work with people that, maybe don't have permanency, right? So you don't have to worry about applying if you're in this situation, like where you don't have like a permanent home, or need to get a physical check, or you don't have a bank account. You don't have to feel like, oh, I can't apply. You actually can. It's actually incorporated in the program, right? So you can get it's $3,600 if you have children under 6 would be your maxed, and then $3,000 if you have older, paid in monthly increments. So it's $350 or $300. Right, depending upon how many kids you have, then their ages. But you do qualify for that. Whether you're a tax filer or not. Anything else? That's the basics of the program. And again, it was really to clarify some of the misconceptions that people were having about it, and some of the caginess that people had about applying for the program. Some of you are already getting it, and you're just like, okay, when is it going to get cut off? And so that was to answer that question. It really isn't. The desire is not to cut it off. The desire is to continue to have it work this way, as long as the president would like to have it, go as long as he can. Let's see. Oh, can you get the child tax credit if you also receive the stimulus check? Yeah, they're actually two separate programs. I'm not laughing at you. I'm just, it's a reasonable question. Yeah, you can actually. They don't really work against each other. So you could have gotten back, like I said, if you've already filed taxes, or if you've gotten a stimulus check already, it's probably already in your bank. You probably already, I think that was it. That was brand new information. Let me see if I have any more questions. Yeah, I think that was it. So we wanted to cover taxes. We'll do another one on taxes around tax time, and we'll get some professionals in here and have you be able to ask them questions, or get more information, and then more information about more programs. There are more anti-poverty programs, and my goal also not to just help you financially, but also help you understand what programs to apply for. If you looked at one of my older videos, I did talk about applying for Department of Child Support Services at one point, because a lot of people either think that's for poor people, or they think that they can't apply, or a lot of people didn't know it existed, and everyone was like, oh, I didn't know you could do that. So my goal also, not to just give you financial literacy, but also to keep you up to date on these programs that are being offered, what they mean, help to break them down. There was a lot of confusion on the child tax credit, and I will beg to say, or I will dare to say, that many of you didn't even know you could get it. Many people just had no idea that they could get the child tax credit if they didn't file taxes. You just assume that, or if they don't have an address, or if you don't have a bank account. All of these people were thinking, some of you are out there like, yeah, I didn't know that. Yeah, but you can, and it is encouraged that you go get it. So go get it. And then also the information with the IRA. I hope I was able to get that to you, inform you, break it down, and tell you the benefits of that as you grow financially, and you build that mystery thing called a portfolio to some of you, or you grow your portfolio, or your portfolio begins to break down. These videos will help you with that. and will allow you to, wherever you are, even if you have to liquidate because you started all over, even if you didn't plan for retirement and you're 71, it doesn't matter. These videos will help you with that, and I'm going to get the information that I can get to you to help you at whatever stage you're in. So thank you so much for joining us. Thank you for those of you that always return, and I will see you next time. Make sure you like and subscribe. Thanks.